Ahoy there, fellow speed demons. Welcome to the exhilarating world of cryptocurrency trading, where the stakes are high and the rewards can be even higher. In the fast-paced world of cryptocurrency, knowledge is your nitro boost. Just like a rally car needs fuel to speed through the track, you need the right information to navigate the crypto market. And when it comes to navigating this exhilarating yet unpredictable terrain, trading charts are your trusty roadmap. They provide you with the insights needed to make strategic decisions. Imagine jumping into a rally car without a dashboard. No speedometer, no tachometer, just pure instinct. Sounds terrifying, right? You'd be driving blind, unable to gauge your speed or engine performance. No speedometer, no tachometer, just pure instinct. Sounds terrifying, right? Now think about trading crypto without understanding charts. It's equally daunting and risky. Trading crypto without understanding charts is a bit like that. You'd be making decisions based on gut feelings rather than solid data, which can lead to costly mistakes. Charts, my friends, are the visual representation of price movements over time. They are the heartbeat of the market, showing you the highs and lows, the trends, and the anomalies. They tell the story of a cryptocurrency, revealing its past performance and hinting at its future potential. By studying these charts, you can identify patterns and make educated predictions. Whether you're a seasoned trader or just starting out, mastering the art of chart analysis is essential for making informed decisions and maximizing your chances of success in the crypto market. It's like having a seasoned co-driver guiding you through every twist and turn. Buckle up, because we're about to embark on a thrilling ride through the world of crypto trading charts. Get ready to decode the secrets of the market and steer your way to success. Let's hit the road. Now let's pop the hood and examine the engine of these charts: candlesticks, volume, and trends. These elements are the heartbeat of technical analysis, the very essence of understanding market behavior. These three elements are the fundamental building blocks of technical analysis, providing valuable insights into market sentiment and price action. They help traders make informed decisions, predict future movements, and understand the underlying forces driving the market. Candlesticks are your primary source of information. They tell a story of the market's past, present, and potential future. Each candlestick represents a specific time period, whether it's 1 minute, 1 hour, or 1 day. The shape and color of the candlestick provide a snapshot of the market's behavior during that time frame. A candlestick with a green or white body indicates a price increase during that period, while a red or black body signifies a price decrease. The wicks or shadows show the highest and lowest prices during the period, giving a complete picture of the price action. Volume, represented by bars at the bottom of the chart, shows the number of coins traded during a specific period. It's a measure of market activity and liquidity. High volume often accompanies significant price movements, like a sudden surge or a dramatic dip. It indicates strong interest and participation from traders, which can validate the strength of a price move. Trends, my friends, are like the currents in the ocean. They guide the overall direction of the market, helping traders navigate through the waves of price changes. They indicate the general direction of price movement over time. Identifying trends is crucial for making strategic trading decisions. An uptrend signals rising prices, a downtrend suggests falling prices, and a sideways trend represents a period of consolidation. Recognizing these patterns can help traders anticipate future price movements and adjust their strategies accordingly. Understanding these core components is like knowing the difference between a spark plug and a carburetor. Each part plays a vital role in the overall functioning of the market engine. It's crucial for making sense of the road ahead. By mastering candlesticks, volume, and trends, traders can develop a comprehensive understanding of market dynamics and enhance their ability to make informed trading decisions. Just like a seasoned driver can anticipate the next turn, experienced traders recognize recurring patterns in charts that provide clues about future price movements. These patterns are like a roadmap, guiding traders through the often turbulent and unpredictable world of trading. By studying these patterns, traders can make more informed decisions, potentially increasing their chances of success. The ability to read and interpret these patterns is a skill that comes with time and practice. These patterns, formed by the dance of candlesticks, volume, and trends, offer valuable insights into market sentiment and potential trading opportunities. They act as visual representations of the collective psychology of market participants. One common pattern is the head and shoulders pattern, which, as the name suggests, resembles a head with two shoulders. This pattern is often seen as a reliable indicator of a trend reversal. This pattern often indicates a reversal in the current trend. When traders spot this pattern, they may anticipate a shift from a bullish to a bearish trend, or vice versa. Another popular pattern is the double bottom, characterized by two consecutive lows at roughly the same price level. This pattern is often seen after a prolonged downtrend and can signal a potential change in direction. This pattern often signals a potential bullish reversal, suggesting that the price may be poised for a rebound. Traders look for this pattern as a sign that the market may be ready to move higher. Remember, chart patterns are not crystal balls. They do not guarantee future price movements, but rather provide a framework for making educated guesses. They are simply tools that help traders identify potential trading opportunities based on historical price action. By combining these patterns with other forms of analysis, traders can develop a more comprehensive trading strategy. In the end, the key to successful trading lies in continuous learning and adaptation. The more you understand these patterns and their implications, the better equipped you'll be to navigate the markets. Section 4. Real-world recon, deciphering live charts. Let's put our newfound knowledge to the test and analyze some real-life trading charts. Remember, the key is to look for patterns, trends, and volume confirmations to gain insights into the market's behavior. This chart, my friends, shows a beautiful uptrend. Notice the higher highs and higher lows, indicating strong buying pressure. The increasing volume during the uptrend further confirms the bullish momentum. Now, take a gander at this chart. See that head and shoulders pattern forming? That's a classic bearish reversal signal suggesting that the uptrend might be losing steam. Remember, practice makes perfect. The more charts you analyze, the better you'll become at recognizing patterns and making informed trading decisions. Section 5. Chart Whisperer. Tips for savvy analysis. Now that you're familiar with the basics, let's fine-tune your chart analysis skills with some insider tips. Think of these as your secret weapons for navigating the crypto markets like a pro. First, always consider the bigger picture. Zoom out and look at long-term charts to identify the overall trend before diving into short-term price fluctuations. Second, pay attention to volume. Volume is like the fuel that drives price movements. High volume confirms the strength of a trend, while low volume suggests indecision or potential weakness. Third, don't rely solely on charts. Combine your technical analysis with fundamental analysis, which involves researching the underlying factors that influence a cryptocurrency's value. Remember, trading is a marathon, not a sprint. Be patient, stay disciplined, and never stop learning. Section 6. Charting your destiny, mastering the markets. Congratulations, petrolheads. You've embarked on a thrilling journey into the world of crypto trading charts. You've learned about candlesticks, volume, trends, and common chart patterns. You've even analyzed real-life charts like seasoned traders. Remember, mastering chart analysis is an ongoing process. The crypto market is constantly evolving, presenting new challenges and opportunities. Now go forth and conquer the crypto markets. Analyze those charts, spot those trends, and make informed trading decisions. And remember, just like in a race car, calculated risks and a bit of daring can lead to exhilarating rewards. Good luck, and may the trading gods be with you.